What's up, everybody? Welcome to the Real Estate Reserve Podcast. I'm Jason Balin from Hard Money Bankers. Sitting across from me on camera, if you're watching this live, Ian Horowitz from Equity Warehouse. Thanks for everybody for tuning in today. Promise we're going to keep this fun, entertaining. You might even learn something, which is always good. As always, if you're a returned follower, viewer, watcher, listener, thanks so much. We certainly appreciate all your support. And if you were just chiming in for the first time, welcome. Ian, what you got up on the itinerary today?
Dude, it's fucking tax season. I feel like all year is tax season anymore. Like,
when you file extensions, it's all year is tax season.
Dude, it's nonstop, and it's just like, and they all seem to land on the Jewish holidays, which is also funny. And our tax accountant or our accountant, you know, they're Jewish, and it's like every all the dates line up with some important Jewish holiday. So anyway, it's always a war zone around here trying to get taxes done. It is what it is. Other than that, it's getting beautiful out. Finished up a badass class yesterday for the guys in self-storage secrets. That was fun. But more importantly, enough about us. Let's talk about the guests we're bringing in. We, you know, as you guys know, we love bringing guests in that are actually real people doing real things, not your gurus. So, you know, if you get any value out of this show today, please like, share, comment, leave us a 5-star review. That's how we keep this show going. Nothing else, nothing more. But a friend of ours, John Farling, who most of you know, introduced me to Dan a little bit ago, who's a fellow fireman for the city of Cleveland. No clue what's wrong with my video right now. He's a fellow fireman out in the city of Cleveland. And he invests in real estate, and he's going to get on here and talk to us about some fun times in Cleveland.
Hey, Dan, welcome to the show. How are you?
What's up, guys? How you doing?
Not too bad. Not too bad. Thanks. Why don't we just start? Again, thanks for coming on the show. Why don't we just start a little bit about your background and where you are and everything you got going on? That'd be great.
Yeah. So again, said I'm in Cleveland. Been a full-time firefighter since 2010, and around 2013, I kind of just figured I wanted to do something a little different. Didn't really know what to do. I saw an ad in the newspaper, believe it or not, to get your real estate license, and it was like at a discounted price, the classes. So it was like, it's like less than $1,000. I'm like, yeah, it's kind of worth, the shot there. So took the classes. I got licensed in 2013, worked as an agent till about 2018, as a fireman, and then just as a residential real estate agent. Pretty moderate success. And 2018, I kind of went to a mastermind for investing, and I was working with some investors for like flips and stuff, and I never did anything on my own. And I was feeling pretty good about myself as an agent, as a fireman, thought I was doing pretty good. And I went to this mastermind, and I was just like the smallest fish in the pond, and just like, it just blew my mind. And I came back that weekend. I was like, I'm not an agent. I'm an investor. And since then, it's been pretty gung-ho. Bought my first rental property in 2018, and just been going down that path, wholesale, rental properties, flips. About 2 years ago, started acquiring storage units. I have 4 storage facilities currently. So kind of just running the gamut on just all the hot stuff, all investors are doing all over the country. So
yeah, we'll get into some of that, but talk to us, and we're gonna get back to like your first deal and like when you made that bridge. But like you were talking about this mastermind, just kind of glazed over. It's funny, Jason runs a mastermind for private lenders. John and myself have been kind of sorting out a mastermind of sorts to do with real estate investing or self-storage, and it's been fun, because that's where we all get the most value. Being around people who are similar to us. What that first mastermind, like, what was your expectations going into something like that? Like, what were you expecting? And then what did you do?
So, well, it's funny is the one I met, the Mark Evans mastermind I met you at, it was actually that, but it was a much more intimate setting. It was only probably like 30 people there. And I didn't have any real expectations. I knew him through another person, and he reached out, told me to come, and I said, just investors. And I walked in, and like literally everyone there had like 7-figure businesses. And I was like, dude, I thought it was so cool because I made like $100K on the side of my part-time job, like, so it's like, it just totally opened my eyes. And they had the lifestyle that, I wanted, investing in real estate. And it was just totally like immediate mind shift transformation of just like what was possible. And like everyone was just so like, it's just casual, like how we're talking here. It wasn't like these guys were like advanced in any kind of facet, and much smarter than I was. So it just seemed so obtainable. And I was like, I can't believe I didn't do this earlier. So it was those masterminds and group and networking stuff like that's been very like transformational in my growth for sure.
Yeah, I mean, that's the case, I think, when you get in the room with a lot of like-minded people, mastermind groups and things like that. Not many of them are smarter or maybe even more motivated. They've just taken action, and they've they did it in an earlier stage. I mean, I remember going to events early on in our career, like shortly after college, and I was like, these guys are schleps. Like, these guys don't, how are they so successful on some of this stuff? And, then you kind of look at yourself and be like, hey, if I took action and if I was motivated and I learned the know-how of it, I could be just like these guys. And, that's kind of happened. So it's interesting how kind of some of that stuff. And I think about that all the time with a lot of people out there. Like, they're just taking action, being motivated, putting in the heavy lifting, not being too good for doing things. I think a lot of people are like, I'm not doing that. Like, I would never do that, or I wouldn't do this, or I wouldn't do that. It's like, dude, get down and dirty, get your hands dirty, and let's go, because someone's got to do it. And I think that's limits a lot of people just because they're not willing to do it, or they just don't. They don't. I don't know. They don't grind hard enough.
Well, the masterminds are also where you go to get like the tools for the toolbox, right? Like you're going shopping essentially. You're learning from other people, and you're sitting in a room. You're like, man, this guy's doing it way better than me. Cool, I'm going to learn from him. And then you got the guy that's like behind you, and you're like, yo, let me show you something, because you're learning whether you're getting it from someone or you're giving it to someone. I think that's the power of those rooms, and it's It's interesting because, when we first started, I'm sure you as a fireman are the same way, type A personality. Fuck that. I don't need this. We're good. I'm just going to be the tough guy. And then you sit down in one of those rooms. You're like, God damn it. Like, I should have came to one of these years ago.
For sure. Absolutely. Like, I'll just read books, I figure it out. Like, I'll just grind, slam my head against the wall a few thousand times and figure it out. And then there's like, dude, there's so much quicker way. It's definitely the fast path to success is learning from people. And like, so the big difference too is like, I'd go to like conferences for realtors and stuff. And like, no one is really open to sharing like how they got that. Like, everyone's very guarded. And you walk into a room with investors, it's like, dude, here's the playbook. Like, you just got to go out and do it, Like, 90% of them be like, no one's scared to give you the playbook because I know 90% of the people can't take getting punched in the face every day. I mean, that's what it is. So it's totally different. It was a totally different mindset. I resonated so much more with everyone in that room. And it was just like, it's where I needed to be.
And here's the thing, investing, selling real estate, all of the above, it's not brain surgery. Like, it's not hard to do. I mean, I'm not the best hard money lender in the world. Ian's not the best investor in the world. You're not the best investor in the world. And you never will be, right? None of us will be. There's always going to be somebody that is better than you, but you will still be more successful than them because you take action, you put in the grind, you do the dirty work, and that's it, right? Like, it's not going back to, it's not brain surgery. It's not the hardest thing in the world. Anyone can learn it, but most people aren't going to take the time to learn it or put in the heavy lifting to do so. And I don't know if it's that people are lazy or if it's beneath folks or whatever. They just don't have the will. But I thought of that kind of the same thing as with education, over as you kind of transition and, have different seasons in your life and in your investing career, and you move from asset class to asset class, or hey, you start with like a rinky-dink rental property and then you move to something bigger. It's not all that much harder to learn. It takes time, right? And you do it, and then you learn on the job, and you rinse and repeat, and you learn. You continue to learn as you're doing things. So it's funny how that works. And it's like some of these folks, like, you have no excuse not to be successful. You have time, you have resources, you have money. You're just missing the will or the grind or the ambition to do so, which is no excuse.
That's 100. That is 100% right. And we all know none of us are sitting on here unless we swing the bat. Speaking of swinging the bat, Dan, so like you were a fireman first, and then you bought your first rental property, or I guess you got your real estate license, and then you started buying rental properties. What did your first rental property look like, or your first real estate deal look like?
So it was a duplex I bought in a say Class B area, very working collar, blue collar working class. It was on the MLS, and it was sitting there for a while. It came on and off for a while, so I was looking at it, and I ended up making a pretty low ball offer on it, and was pretty soundly rejected. But I just asked for a counter, and they came back, and we were actually able to meet at a pretty reasonable price. So I bought it with hard money, and I renovated it, and I did an absolute terrible job. And I was like way over budget. I think it was like $25,000 over budget, which was pretty significant for my first property, right? But I was able to refinance it all out. So, I bought right, which was the saving grace. It rented really easily, and cash flowed really well. And I actually sold it this year to an out-of-state investor. But yeah, it was a pretty good property. It was definitely able to get my feet wet, learned a lot, especially with the renovation and the contractors. And it actually worked out really well too, because I bought 2 more properties from that owner, because we established a relationship, and it was kind of like he was retiring. He wanted to pass this stuff down. I was learning. So he actually seller financed me 2 more duplexes, which was, so it turned over, 3 properties over a year and a half that I acquired from him. So it was a pretty good relationship to start.
Well, so like I know Cleveland attracts a lot of out-of-town investors the same way Baltimore does. And we used to compete with idiots from New York and DC and all the big dollar cities. I know Cleveland's got a massive attraction.
Yep.
Can you just give us I think the attraction is that the price point's so low. Can you give us kind of an idea what your price point was on your first property?
Yeah, I bought it for $53,000.
You bought a duplex, 2 units for $53,000.
Yep.
What'd you end up putting into that?
Well, embarrassingly, I think I ended up being at like about 90,000 all in. But it appraised for 150, so I was okay. But I thought it was going to be a quick in and out. It wasn't.
It never is.
Lesson learned. First one, but I was saved. I was saved by the market for sure.
And what was rent on that? So you're all in for $90,000. What's rent look like on that?
At the time when I leased it, or initially, it was 800 units, so 1,600 total. When I sold it, it was at 1,900.
Total. 1,900 a unit?
Month, excuse me.
Total
gross. And yeah. So it was 800 a unit when I leased it initially.
Just out of curiosity, what's like the average rental property rent for now compared to what you can pay for like a turnkey property?
So, in a duplex, you're probably a 2-bed, 1-bath in Cleveland. You're probably about $1,000 a month a unit. So a duplex will get you about $2,000 a month gross. You're going to buy that at $2,000 a month. It's going to be in pretty good shape. You're going to be buying that somewhere between like 180 to 200,000.
Yeah, so it's like a 10 cap.
Mm-hmm.
Yeah. So yeah, that's similar to what I think Baltimore was. I don't know if Baltimore's still that though.
Yeah, Baltimore's pushed up a little bit. I think Cleveland's still relatively affordable to the rest of the country.
Yeah.
Well, that's why these out-of-state investors that just look at things on paper and not
chasing yield.
and chasing a yield of, it's like, listen, you want that super high cap rate, but it comes with beyond being an active investor.
Sure. Cleveland's like, the 1% rule is like the guru turnkey math, and Cleveland like lines up perfectly. So, I mean, I probably sold about 35 properties to out-of-state investors last year and a half. And it's all been on the 1% rule. And it is not in line with what market value is for these properties. But I literally get texts every day from these investors, like trying to find more properties like that. It's a unique market, and it is not passive by any means. So I don't know who's fed them that line, but you're not yielding that 1%.
Yeah, it's passive for that guru. The only thing, someone said a good one the other day. They said the only thing passive about the guru is that goddamn monthly subscription. I pay him every month, and I was like, that's a good one, buddy. That's a real good one. How many residential units do you have? I don't even think we covered that.
It's 33 units currently.
So you were upwards of almost 100. You sold off about 35, and you're down to about.
Well, so I've kind of whittled my business down. I have a very specific criteria for properties that I keep for residential. And then almost everything else I'll try to sell on turnkey to an investor out of state.
Well, let's hear the secret. What stuff do you keep?
That's the secret, buddy. I don't want my investors. No, it's just stuff that's close to me, single family. And close, I mean like a 15-minute drive, 20-minute drive. Only single families. I won't keep any duplex, triplex, or 4-unit. Just the monthly management on it is just too much for me. I want something that I could just kind of set it, forget it in those aspects. I can make more money, buying a bigger property like a storage facility or, some other commercial or industrial property I'd rather own than have to worry about 2 tenants squabbling over, who gets to use the dryer, at certain times of day. It's just like, I don't have the capacity for those complaints,
So, obviously you own other types of assets and storage facilities and bigger commercial and multifamily stuff. Like, have you considered up in your asset class, getting rid of those single families? Because I know a lot of folks, they start with single families, right? They're at the price point, they're at the knowledge base that everybody's comfortable with. And then, they outgrow them, right? They trade in a 1-unit for a 4-unit. They trade in a 4-unit for a 16-unit. They trade in a 16-unit for a commercial building or self-storage facility. Is that something that's on your radar in the future, or are you kind of comfortable with those and it's kind of set it, forget it? So that's like the first part. The second part is, have they reached fulfillment or capacity? And what I mean by that is, in a market cycle like we're potentially in now, we could potentially be at the top, right? So it's like, hey, I bought this property 3 or 4 years ago. It appreciated $100,000 more than I was expecting.
Mm-hmm.
I don't think I can get any more out of this thing. Why not, sell it, 1031 it into an asset class that has value add growth? If that makes sense.
Mm-hmm. No, those single families are ultimately there to serve a higher purpose, and whether it's lending against the equity or just trading them in, cashing out and 1031 to someone else, like, they will not be in my portfolio for the long term by any means.
Sure.
They're great, and it's there's definitely advantages, but they'll serve its purpose, and the purpose is going to be to get me equity into a bigger property, and that's what it'll be. So it's just the low hanging fruit. There's just so many available. Like, it's kind of like the whole goal is to set up the residential as like a business machine to generate capital and equity to buy larger commercial properties. So as they come on and come available, I'll take them down with that intent. Like, I'll hold this for 3 years maybe, and maybe in a portfolio, I'll get a portfolio loan with 5 of them, and I'll have enough to make a down payment on a larger property, or I'll sell them as a portfolio to an out-of-state investor and use that equity to put as a down payment. But those aren't there to pass down to my kids or their grandchildren. Like, I do not want these. I don't want to outlast a roof or a furnace, like.
Yeah, no doubt. Yeah, no, I was curious because different people have different business models and they have different ambitions. And, the beauty is there's no right or wrong and everyone wants to do things differently. Like, I think, when Ian originally started acquiring a lot of rental properties, like, this is it, right? I got one, now I got 10, now I got 100. I'm going to just get 10,000 of them. And like, different problems happen, different challenges happen for good and bad. And then you get into an environment like we've been in over the last few years where it's like, hey, these things appreciate a hell of a lot more than I was expecting them to. Maybe it's a good time to, take chips off the table and move on to something else. But then that might not also be the right answer because it's like, okay, well, what do I want to move on? Right? I sell these at a premium, but then I got to potentially overpay or buy the next asset for a premium. So that might not be the answer either. So it's always interesting to hear lots and lots of different people's mindsets and like goals and just where their head is related to that, because there's no right or wrong. And if someone's answer is I want to own 100 single families because it's something that I know, it's something I understand, it's something that's local, it makes a lot of sense to me. That's the answer. And someone else might be, hey, my whole goal to buy 100 of these is to give me capital to 1031 into one commercial legacy asset. And that's okay too.
Mm-hmm.
Yeah. Well, and that's the thing. That's the velocity of capital. That's the thing about restructuring your portfolio. We've talked a lot about the 80-20 rule and dumping stuff off the bottom, to be able to continue to grow. We just listed a storage property. Even though it's in the mix of all of our other stuff, it just doesn't make sense to keep anymore. And we can cash out and keep it moving. Why wouldn't we? Of course, everybody's texting me, why are you selling this one? But that's a whole other story. But you know what? Some things just don't fit for you anymore. What did it look like for you? Obviously, so you build this and you build a nice little business here. How'd you end up in the storage world or commercial assets in general? Like, was that a big switch for you or you stumbled on it? What did that look like?
Yeah. It happened mostly during COVID, and like, it was just, things were kind of a little haywire. And I was like, hey, I wasn't being able to get in people's houses. And I was talking with a friend and we both really liked what storage, how I was looking, and, kind of just gave it like, the old college try. Just started cold calling some facilities and got one that was super interested in selling. And it took a while for us to work it out. It took about 8 months to work the deal out. And once we did, we started operating, and it was like, this is incredible. Like, this is the easiest thing I've done, versus coming from owning a bunch of duplexes. Like, it's so much, just enjoy the asset class so much more. So gave it some, meaningful time trying to acquire some more. And, we're still looking. Obviously, the competition's just, it's like growing every day because of that. But we're definitely in the storage industrial business for the long haul, for sure.
What kind of advice would you give somebody who is working a full-time job? Maybe it's a job they really, really enjoy and they make good money, and they want to kind of entertain real estate. Should they go in there? What type of assets should they go into? How fast should they dig in? Is it something that potentially they want to replace their job with? Like, where there's a lot of followers and listeners. Sure. And I'll tell you, and I've been very very vocal about this subject. Like, some of the most successful real estate investors I know have other jobs. They have full-time jobs, either government jobs or whatever trade they are, CPA, attorney, things like that. And they're very, very successful in that. And they want to do real estate investing, private lending, things like that on the side. And they're not necessarily trying to do it to replace their income. They're trying to do it to make more and more and more money. Since you're kind of I'm guessing you continue to work at the fire department because you enjoy it. Like, what kind of advice would you give to somebody maybe newer, starting out?
Yeah, I mean, there's definitely advantages of having that W-2 right off the bat. From a lending perspective, it's golden. I mean, I don't know if I would have got my first hard money loan without my W-2 income there, and definitely would have gotten the refi. I went traditional bank route. I didn't do like a DSCR lender or anything like that. So that was huge in getting that, and continuing to grow those loans. You get 10 or whatever. So that's huge. I mean, firefighter income won't support that, but maybe someone else's does. But that's really key in growth, is having that W-2 for the bank. I mean, I think being bankable is very underrated when they talk about in the world of real estate. Like, everyone wants to do all these different asset classes. Like, there's all these mixed uses available in Cleveland for super cheap, but no one wants to give you a loan on them. So it's like they're kind of pointless. So when you have that W-2, you're definitely bankable in that aspect, which definitely helps you. I think a lot of people that work a regular job and try to jump into real estate, kind of fall into the HGTV model, and they want to do all these huge renos and stuff. Like, your goal should just be to hit singles for the next year and just see where that takes you. Just making some return, letting the market grow, get some appreciation in your asset and some principal pay down, and then just see where you want to be. Like, all right, so I have, 2 rental properties, 3 rental properties, kind of like this. I don't, then you move into different asset classes and try that. I think, when I was wholesaling quite a bit more, and the whole goal was to get the weekend warrior, because they would totally overpay for an asset and they had some cash. They just come in and they would, take out walls, blah, blah, blah. It's like, that's the absolute worst thing to do, is to bite off more you can chew. Like, start very reasonable, especially if you got a family and your time commitment. Like, you don't want to be over painting a house 10 o'clock on a Wednesday, for the next year of your life. So turnkey's not bad. If you could get turnkey at like a 2%, I would say you're probably golden there, as far as like, building some equity and some principal pay down there would be great. But I would go on, smaller scale, start slow, figure out what you want to do, and then you go ahead full force.
Yeah, I think that's something that's missed. Like, people need to understand, like, they're viewing the fruits of all of our labors of hitting singles over and over and over and over again, and doing the same thing over and over and over and over again, getting really good at it, to then be able to go out and branch out to the new asset classes. And everybody sees our success, your success, Jason's success. They're like, oh, I'm going to do that tomorrow. No, you're not, right? Like, maybe you are, but most people aren't. Most people hit one roadblock and they say, fuck it, I'm done. So I think that's smart. I would say the same thing for us. We said being bankable and getting really good at one thing is what we did over and over and over again. And having the fire department job has allowed us to then create the scale that allowed us to ultimately leave. And I think there's advantages to that most people overlook.
Yeah. I'm just going to rehash what you just said, because that's probably the most important takeaway. If you're just starting out, you should only be concentrating on hitting singles every day. And if you've been in business for a long period of time, you still should only concentrate on hitting singles every day. That's all we've done for 16 years inside our lending company, is hitting singles. And they turn into big things. It's slow and steady wins the race. Too many real estate investors are, trying to scale way too fast. They do a deal. It's like, hey, this is successful. They do another deal. Hey, this deal was successful. They didn't put the benchmarks and they didn't put the foundation and systems in place. And next thing you know, like, they go like this and they skyrocket. And a few years later, a little market correction and they're freaking bankrupt. Just like that. That's not, and no fault to themselves, besides that they scaled too quickly. And they didn't realize, because everything, you learn from the past. And if every deal was successful, AKA every deal over the last 8 years for most people was successful, because the market kept appreciating, maybe 15 years. Didn't learn key fundamentals. So I think you're right. You start with just do singles, and singles aren't sexy, right? Everyone wants to hit that grand slam and home run. Singles aren't sexy, but they work and they pay the bills. And guess what? You're protecting your downside as well if something happens. Like, hey, if you're new, like, you probably shouldn't do like a $150,000 renovation project, because that's going to turn into $250,000
on a good day.
Be safe. It's like, just be smart, right? Like, you don't need to, if you're flipping your first property, maybe don't make 50 grand, make 20 grand or 30 grand and keep it moving.
Yeah, but that's not from a
Right.
limiting. I hope people understand. That's not from a limiting mindset. That's not a limited mindset. It's from a position of saying, all right, take your financial risk and your financial wherewithal, and what are you willing to risk, right? Like our first house. That's why I was asking Dan what his first house was. We were talking 40 grand. My first one I ever bought was $20,000, right? Like I knew that if I lost that all, fuck it. It is what it is. I'll deal with it, and I can make it up over my career. And I think, Dan, you being in Cleveland, us being in Baltimore at the time, was a competitive advantage because those marketplaces are a little more durable. They have cheaper inventory. They were in our backyards. It allowed us to do what we needed to do. And I know Cleveland and Baltimore are pretty damn similar, with the exception you guys poisoned all of Lake Erie, I think. But we had the harbor. Yeah, fun times in Cleveland. Look it up on YouTube.
Canada did the most poisoning. Everyone knows that.
Yeah. But either way, that's the competitive advantage that you have to seek out sometimes. So if you're watching this, we did that class yesterday. There was a guy from Southern California. I was like, dude, you're not finding any property. You might, but it's not going to be worth your time. Go pick out an area that you're willing to travel to. Even if you go up to Fresno or somewhere else in your state and find somewhere else that's affordable to invest. Live where you want, invest where you can make the money. And I think that's awesome what you've done. What does it look like going forward? I mean, I presume you're going to carry out your career with the fire department. Is that still on the horizon, or are you looking to retire from there? Or what's your goals?
Yeah, that's a good question. Kind of up in the air. We'll see. And I'll be vested in the pension in 2 years, 2.5 years. And my goal at that point is to have the residential business just kind of, have a team in place where it's, kind of the wheels are turning. It's kind of just kicking off pretty steady income, and using that income to invest in real estate, commercial assets. And we'll see. Like my goal is to be at a point where if I want to stay, I can, and not to be at a point where I have to stay.
No doubt. And then I don't know if we talked about this. Are you, do you have any employees, or you just have third party vendors, or how is that set up?
Yeah, so I use some offshore people, mostly for lead gen, and they are doing lead gen for this the residential side, and then I have an admin assistant for the residential stuff that helps with just bookkeeping and just like a lot of marketing stuff. And then I have a project manager who does like the the renovations and stuff, handles that. So that's all on the residential side. And then the storage we have an admin who it's like kind of a GM of the properties. Everything's run through ESS, and we have a call center. And then she basically, talks to our local contacts, the boots on the ground, if something needs done or red box needs placed on that. So
nice. Does your wife work with you, or?
No, my wife's a nurse, so she does that.
I'm always interested in family dynamic businesses because my wife and my in-laws, it was just the four of them that work together. I'm like, you guys are crazy. There ain't no way. I can't do it. I need to be on my own, but some people can do it. So interested in that. Looks like we all need to move to Ohio because I know Michelle's out in Ohio somewhere. Singles, our first few rentals were $20K, rehab for 10 to 20K, and appraised out at 100. And sounds like Ohio's got some great opportunity.
It did. Yeah. It still does. Yeah. It's gone super competitive the last few years because the word is out. So it's been good and bad, so a lot of outside investors coming in and competition's increased, but it's allowed me to sell these at a premium to a lot of the turnkey investors, which weren't here back in 2017.
Yeah, that's the thing. You're nimble to the marketplace, right? You buy when you can, and then you sell when you're opportunistic, and you keep rolling that cycle, and you have the velocity of capital. And I think that's smart. A lot of people, and I mean, we're kind of like that. We're legacy owners. Oh, hello.
I'm sorry.
Oh, no, it's fine. We're legacy owners, so there's opportunity, but we keep them. But it's always someone comes along with the right offer, you got to be willing to sell it. So Our buddy Pete, I think he grew up outside of Cleveland, Shaker Heights, I think.
Oh yeah.
Yeah, Shaker Heights. Never listened to me. Ohio's the best state out there. We're gonna have to get out of here, Jay. I can't do this whole Ohio shit anymore. So, but either way, no, man, it's awesome. Real quick about your storage business, you say call center. Are you using ESS call center, or you have it in house?
No, we actually have. They're actually out of Michigan.
Nice.
Yeah, they do a really good job. They intake calls, they rent out units, they do move outs. Any complaints that we get, issues or whatever, it comes into them, and then they forward us to email, and then it goes to, our local admin girl, and she sends it out to the boots on the ground to the facility. So they're like the very forward facing. They're the forward-facing part of our business for sure.
Do you think that's an asset class that you'll continue to try to grow into if there's opportunities? Obviously,
yeah. It's kind of been the focus has been to grow the residential into an actual business that produces the income to invest in storage. So we had a lot of success early on with like our mailers and stuff for to the facilities, and that's definitely cooled off this year. So the opportunities haven't been as good, and we haven't put as much time into it as we need to, because just the focus is growing that team and that business on the residential. But ultimately, like that's definitely an asset class that we want to stay in for sure. I mean, we've become pretty good operators in it. So, the more we could acquire, it kind of gets easier then.
Yeah, no doubt. As you scale, one of the questions we like to ask all of our guests is if you have a favorite book or a podcast that you're currently listening to that you want to share, or recommend to everybody. I think most people read or listen to podcasts based on recommendations, so it's always interesting to hear what other fellow entrepreneurs in business.
Yeah, I would say everyone wants to say rich dad, poor dad. That's like the cliche answer. I think what's really helped me is kind of like, I've been reading a lot of like psychology books, like kind of not like advanced psychology, but like business psychology and understanding how people react. It's helped with sales and stuff. Right now I'm reading, I think it's it's called the 48 Laws of Power. That's a pretty good one. I really like that stuff like that. A lot of Stoic books I read, Ryan Holiday and Stoicism stuff. I think that helps a lot within business and in just seeing how people react in certain situations and being able to kind of predict how things are going to go. And that definitely helps with like maturing as a business owner, I think, as well. So
have you ever read The Psychology of Money?
I have, yeah. That's a good book.
That's been a popular one for us to read, and I think a lot of our followers have as well. So yeah, I agree. Anything psychology wise is related to business or sales or marketing or how buyers think or sellers think, I think is super important and very underrated.
Yeah, Who Not How is a good one too. I think as far as like scaling and growing. That's a pretty instrumental one.
Yeah, that's a good one that can be applied every single day that a lot of people don't think about. It's very easy to be like, oh, I'm just going to hire someone to do it. But it's like, no, you like really need to think about like a lot of times you could probably sub something out that you don't realize you could sub out. And even just the fact that it might not get done the same way that you're going to do it, at least it gets done. So, but yeah, man, those are all good books and good information. Where's the best place people can find you on the internet or get a hold of you if they want to buy something out in Cleveland?
Yeah, they send me an email, Dan at JPCLE Homes. That's the website too, jpclehomes.com. Send me an email. Give me a call, 440-815-1812. That's the bat line. I'm on Facebook. Feel free to reach out to me there. I don't have a huge online presence like you guys, but I'm looming in the background a little bit.
Dude, we're going to skyrocket you now. Everybody's be buying homes in Cleveland. So.
Just buy them from me, that's all.
Yeah. No, it's all good, man. You know, we do it. It's the same thing. You know, you do it. You're like, oh, yeah, I don't know if I want to do this podcast because you said you don't do a lot of them. What am I going to talk about? Dude, you absolutely crushed it, man. Everybody's got something to share, and you're a real person doing real deals. And I think that conveys and it resonates with a lot of people because too many people, like you said earlier in this conversation, they get sucked up in that guru bullshit. And then you get out there and you find out that is not the real world. Like, this is real world investing. This is real time. This is what it looks like. So appreciate you being transparent and honest, man. That it really will resonate with our audience very well.
Cool. Appreciate you guys having me. It's fun.
Yeah, man.
All right, guys. Certainly appreciate it. Dan, thanks again for coming on the show, and we will all chat soon.
All right.
Thanks for tuning in to the Real Estate Reserve Podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.